All right, everyone. Well, I think it's about time to get started. Thank you for joining us today for this session on AI agents, and the future of financial services. I'm very excited to be here. Before we get started, let's do a little bit of housekeeping. If you have questions during this session, please ask them here in the platform. We will be doing our best to answer them during this session if we can, but if we cannot, we will get back to you after the session with answers to those questions and follow up. Yes, a recording will be made available to you afterwards, and so you can share that with your friends or watch again if you want to do that. Also, check the platform here for some links to some of the papers and the documents that we'll be citing today. That will help you get to some of those things which you might want to read for further information as we go. So with that, let me just quickly introduce myself. Hi, my name is Joel McKelvey. I am the head of industry solutions here at Glean, and I was recently looking into the use of AI agents in financial services, and I came across an excellent paper done by Citi, and I am very, very excited to say that we have one of the authors of that paper with us today, Ronit Ghose, who is of Citi's Global Insights. Ronit, I just wanted to say thank you for this paper, first of all, because it was pretty insightful to me. And I'm honestly excited to get to share the paper and some of your thoughts with our audience today. So thanks again and welcome. Maybe we could start with you telling us a little bit about yourself and Citi Global Insights. What is Citi GPS? What is Citi Global Insights?
Sure. Thank you, Joel, for having me to chat to you today. GPS, Citi GPS is the brand of the product or the report. It's been going for over a decade now. I wrote my first GPS report in 2016, and there was actually a lot of AI in there, as in 2015, I got really fascinated, went down the rabbit hole of what were the Chinese internet companies, the Alibabas and the Tencents, doing on AI. And I was lucky enough I was still working in the UK, in London, which is my hometown. And I had a colleague who was originally from China. She'd emigrated to the UK, and we were working on this together. She was like my secret sauce. And with her help, we went deep into the ecosystem and published a report in 2016 about how some of these Chinese tech companies, internet companies, were eons ahead when it came to decision making, because they were digitally native in a way that most Western companies weren't. And they were using AI tools to make decisions really fast. And that was the first GPS report that I helped lead in 2016, which is also the year I moved to Dubai, where I'm based now. Citi Insights, or actually, we're in the process of rebranding. So the new brand is Citi Institute. So Citi Institute, as we're going to be called going forward, is our thought leadership unit. All big American, Japanese, Asian, European companies tend to have a think tank. We create analysis and content for our clients, our partners, and also our colleagues and our own leadership. So it's a great perch to be in. I get paid to watch the world and make predictions.
Well, I think that's really compelling what you said about the Asian companies and the digital native aspect of it, because I know that in financial services, there's this digital challenger wave of non-physical banks coming in, particularly into consumer retail lending, right? But and banking. And that's super interesting. But there's use cases for AI across the whole industry, as you mentioned in your paper. Was your focus specific on financial services because of the impact AI could have? What caused you to go after financial services and AI?
Part of it is that's where my heritage and background is. We set up
obviously
Citi.
Citi is a
Citi is a big bank. You might have heard of it. We've been around for over 200 years. I haven't been around for that long, but I've worked at Citi in London and Dubai for a long, long time. So we're a big bank. Many of our clients are also financial services companies. And often when we're talking to non-financial companies, we're usually talking to their finance department or their strategy department. So finance or finance/strategy is usually the focus of what we're looking at. And in the report, we dug into how AI, in this case, agentic AI, was going to impact finance, but also more broadly the economy. Like, what does the nature of the future of firm structure look like? What about startups? Is this going to be a revolution for them? Are we going to have a golden age of startups, like we say in the report? What about jobs? My eldest of my three boys, my youngest is still in junior school. My eldest is just graduating from college. What is the future of work going to look like for our kids, maybe even for us? So the report tries to get into some of these big picture topics, but it's very much rooted in what does a finance sector do? And finance is in many ways ideally suited to AI. And at the same time, it's really hard to use AI. What do I mean? Ideally suited because we're all about data and information. Yes, the end result is credit or payments or investing, but the raw materials of finance, there's no factory production line. It's a white collar production line. It's all about data, knowledge, and this is so uniquely usable when it comes to, or AI is so uniquely usable when it comes to this kind of content. And one of the things we said in our report, we saw some via Microsoft some data showing that the finance sector is the biggest sector when it comes to using AI or generative AI foundation models via their cloud services. And the tech sector is number one, but if I leave aside the tech sector, the biggest sector is the finance sector. So we spend a lot of dollars in this space as the collective finance industry, and that's why we wrote about it.
I think you quote this quote from Kevin Levitt at NVIDIA in your paper. I found it through other research as well, right?
Right.
I agree, right? Financial services is really a place where AI application can make a difference.
Yeah.
It is because it is that white collar knowledge worker type of an environment. But what this calls out, and which I think is really interesting, is the breadth of the use cases, because there's use cases around client acquisition and client care and support. There's research and investment research in particular use cases. There's deeper use cases into some very, what I'd call niche AI around trading algorithms and things like that too, which very specialist AI firms are going after as well. And I'm assuming that pretty much any large trading bank has some proprietary algorithmic work that they're doing too from a trading perspective. But yeah, it's really compelling. But we spoke about this earlier, and I found elsewhere that a lot of these big financial firms, we sometimes talk about them as being old school or conservative, but they're actually really very tech forward. And the ones that I've spoken with have 10. I was just recently talking to somebody who had 18 different AI projects going right now, a lot of which are paying off and some aren't. Is that consistent with what you're seeing? Are you seeing this broad, at least testing of these tools today?
Yeah, absolutely. In fact, if you define AI broadly rather than generative AI, and you looked at AI broadly, so you said AI is what any piece of software or any machine that imitates human behavior. The big financial services companies probably have hundreds of AI applications or projects or initiatives, depending on how you define it. Not dozens, but hundreds. Now, when it comes to generative AI, it's going to be most likely in the double digits. And when it comes to agentic AI, you're probably not going to have a huge amount in the large big bank land today in production, but we're in that early stage across the industry of pilots, which will soon enough go into production, like we've seen with the generative AI cycle. Generative AI, obviously the research has been happening for a while, the foundations, but going out to consumers and industry is 2 years old now. 2022 Q4, 23 is a lot of proof of concepts, and 24 it goes into production. and 25 is about scaling up. There are probably, I'd say, dozens of generative AI projects, but when it comes to AI more broadly, and I'm thinking of the largest banks in the US or globally, you're probably looking in the triple digits. It's a lot. And some of this is really old. Like I talked about my 2016 report on, it was very heavily China internet focused. Credit decision making was being done using AI back in 2015 to 2018 at hyperspeed by some of the digital native players in China. There was this product, I think it was rolled out in the mid 2010s by one of the Chinese internet companies, bank affiliates, and it was called 310. 3 minutes to fill out the credit application, 1 second for the decision to be taken, and zero human intervention. So that product's almost 10 years old now. Inside more, let's say, call it traditional or older banks in the UK or the US, AI has been used for outlier analysis, compliance, risk monitoring, fraud monitoring, whether it's in the credit card division or the capital markets trading division, again, for a decade plus now. And some quite sophisticated AI has been used for half a dozen years, looking at things like voice and behavioral patterns in text and voice, again, for sort of fraud monitoring and internal risk management. But what's really kind of interesting is obviously this generative AI explosion and then everything else that's going with it, the kind of show it to me economy, so Gen AI, and now the do it for me economy, agentic AI, that's kind of raising the bar to another level about what's possible, whether it's in finance or the enterprise world or just day-to-day life. All of us, I quote in the report a fintech founder I know in India, and he quotes his mum in the report. I'm not like picking on mums here, but he says his mum, who is not a particularly tech interested person, unlike her founder son, she began using one of these Gen AI chatbots within a year of it being launched. You've all seen the data, and I think it took her a decade to get onto mobile and digital. So the speed of adoption, and we quote her, she's a lady in well into her 70s in India, but the speed of adoption. What did Sam Altman say the other day about a number of users now? It's an absurd number, right? I don't know what the live number is today.
Surprisingly sticky too, right? We know that people try a lot of technology all the time, but this is one that they seem to stick with.
Yeah, it's just very useful, right? Because so much of our lives is about information management, processing, analysis. We're getting often bombarded with information, and so having a tool, whether for work or for other activities, where we can summarize information, search for information, analyze information, this is all very useful. I mean, I use it. I'm sure we all do daily in terms of particularly on things like pleasurable activities, and that's how it becomes sticky. So I think last month, as I said, I was based in Dubai, so I was trying to say, okay, I want to spend a week with my wife somewhere in Europe. So I put into a chat GPT, listen, here are the places in France, Germany, Italy. I think I said France, Germany, Italy that Emirates flies direct to. Find me all the locations within an hour and a half by high-speed rail that has historically or culturally significant sites to visit and has accommodation that's below a certain price point. And it gave me, and then I tried it on 2 other chatbots. They gave slightly different answers, but they gave me so many interesting things to go away and play with. And I know in work we all use it, like summarization, and it's just very useful.
So we've seen a lot of growth in AI. We see a lot of hype around AI in financial services. And as you said, these are not organizations that have been doing it for a short period of time. These are organizations that are aware of it and understanding it. But I also hear that the hype is dying out and that a lot of these organizations are failing to get the return on investment that they would expect from AI, that the pilots aren't necessarily working out. What is that? That seems to be two different two different views of the same technology. What's your take on that? Is ROI failing to materialize with agentic AI?
So if I take the hype cycle point, and there's this, you can get this data from public sources. You can look at company references and press releases or earnings releases. It's earnings season again right now, and all the banks and other corporations are reporting their Q1 results. And many of them will be calling out Gen AI and AI. Many of the banks that are reporting now will have at least a slide in their deck talking about what they're doing on AI. And if you go back over the last 2 years, that kind of curve went like this. It just went like, bottom left to top right, that increase in explosion in talking about Gen AI. And it's interesting, the technology companies, obviously, many of them who are selling or have a vested interest in talking about Gen AI, it sort of peaked around the middle of last year. If you look at their public comments on Gen AI, agentic AI, by contrast, only began to take off in Q4 2024. So it's in probably the earlier stage of the hype cycle. Q4, Q1 is a sort of takeoff. Generative AI, obviously, from Q1 2023 goes parabolic until middle of 2024, and it's begun to roll over. Just saying, hey, let's talk about Gen AI, or I've got a Gen AI solution, or I'm using Gen AI. It's kind of almost table stakes and is not worth shouting about so much in terms of PR. In terms of production, the challenge is particularly for regulated in industries, and we are in finance one of the most regulated industries. The challenge is our regulators or supervisors need us to explain everything we do, particularly if it's externally facing. If we are, doing some pricing or credit line to a particular individual, company, community, we have to, all of us, justify it, be it in the US or elsewhere in the world. And I've sat down and had many closed door events where I've been speaking to clients of ours, including other banks. And I presented some of our research, and they said, listen, really interesting technology, but for me to implement this, and this was specifically, I was did a closed door roundtable with 3 or 4 big UAE banks and some fintechs, and the banks all one after the other put their hand up and said, yes, we want to do it. Yes, the leadership in the country wants to do it as well as the leadership of our bank. But then the supervisor shows up and says, explain this to me, or how does that work? Run me through exactly how the model, and then that's where it begins to, because there's the whole explainability point. Yes, mistakes and errors and hallucinations are coming down, but they still make mistakes, right? So if I'm doing something relatively non-material, a decision that can be changed quickly, it's great. But if I'm doing something externally facing, even if it's a small thing, even if I can reverse the decision, there's a risk of a negative PR impact or a negative, risk impact. I put the wrong price out because I relied on the model and I didn't have a human checker sufficiently on top of, particularly say, it could be a small, obviously a large transaction is always going to have multiple human checkers, but a relatively small transaction, maybe we just say, okay, that's operational risk, but these software still
when
makes
it's automated, problems like that can compound too, right? So
Yeah.
Even if it's a relatively small, low risk, when it's done at scale, there's risk.
Exactly. I mean, people often, say, well, listen, we humans have our skews, our biases, our prejudices. What's wrong with AI having that? And I'm like, it's a good question, but as you said, Joel, AI can do that at scale. That little skewed error or bit of prejudice can then be applied across so many different cases. Like it won't just be one loan or a few loans. It could be, and it just won't be in one branch or one business unit or one region or one community. It can go nationwide or even international. So, and naturally, the regulators or supervisors want explanations, and that's a process that slows things down. Our own internal, all banks' internal risk and governance folks similarly want explanations, so that kind of slows things down. There's another big factor, which is just to do with that Chinese company I was talking about a decade ago was set up in the early 2010s. It was cloud native, it was mobile native, it was digitally native, it was every word, phrase you can think of native. Most financial services companies are transformation stories. They grew up in the literally in the pen and paper era. Then they went to the mainframe era. Then they went to the desktop era. Then they went to mobile, then cloud, and now. So this takes time, and we don't have necessarily all the data in one place accessible like a digitally native or cloud native company will do. And that makes it a big digital transformation project before it becomes an AI project. That takes time and money, and it's not as bad as your railway in California, the tunnel in Boston, but these things take time and they overrun.
Forever. Yeah, it's an interesting change, because I think now that we're getting to agentic times, that the AI can help with that transformation, in addition to being a transformational and a tool for transforming the workflow. It can also help aggregate the data and sift through it and connect it and unify it in a really interesting way. Look, I want to get into some of the use cases we see here, but before we get there, I want to take some questions here. And so just a reminder for the audience, if you have questions, type them into the platform, we'll get to them. And if we don't happen to answer them here, we'll answer them via email afterwards. But here's one. My company is trying out agentic AI for a few use cases, but my executive team is not convinced. Are we behind? How do I help move them along quickly? I imagine you get questions that are on either side of that divide pretty frequently.
Absolutely. We get this internally from colleagues. Just earlier today, I was in an internal call with one particular regional exco, and they were saying the same question to me, like, who's ahead, who's behind, why are we doing more, why are we doing, and it's a question that comes up, I think, I speak to a lot of banks and FIs. Most of them, maybe all of them are clients, counterparties. And, I was in Spain a couple of weeks ago, Singapore just last week, Hong Kong, and it's the same questions. Everyone's kind of looking over and saying, who's ahead, who's doing what? And typically the gap is between, I think, the digitally native companies in finance and the rest. And it's the same, I assume, in most other industries. And it's not because they're necessarily smarter or they have more money. It's actually, they often they have smaller budgets often, the digitally native companies in finance. They probably think they're smarter, but the real difference is it's a founder versus custodian mentality. Most of the digital native companies, the fintechs, are still run by their founders. And when you're run by and it was the same in China in the last decade, it's the same in the Western world, in the US or the UK now. When you're run by the founding team, maybe you take some risks. Maybe you sort of, I'm saying they're bad or good, but your risk tolerance, your risk threshold, it's kind of, you can say it's my company. And, I remember talking to someone, an ex-colleague who'd gone to work for a big Chinese company, and he said, listen, so what's different about management style, business planning? He goes, founder decides something with his closed group of advisors, and the founder says, we take the risk. If someone needs to go to jail, I'll go to jail. Now, I'm not saying most founders think like that. That's an extreme case, but you need someone to take that kind of principal risk. And it's probably not, when it comes to regulated industries, advisable necessarily to do that all the time. And so there's that difference. On surveys, we've done a lot of surveys of our peers and clients in the finance industry and the large corporate sector. Most are in the early stages of using Gen AI and agentic AI. So if I leave aside machine learning, if I look at generative AI and agentic AI, it's still very much early. So we did 100 plus client survey last year of corporates and FIs. Roughly 85%, this was the middle of last year, was saying we're still just getting going, or we've just got going, or we're getting going. It was low double digits percentages of our clients who were saying, yeah, we know what we're doing. It's and we quoted that in our report that we wrote in January that you called out, and thanks for that. And also the previous GPS last summer we wrote on AI. Most of the big companies are just they're just getting going on Gen AI. So I wouldn't worry about being too far behind. The question is going to come in the next 2 or 3 years as cost of usage falls, because a lot of these ROI questions are based on token cost or usage cost as of end of last year, Q1 this year. With every new technology, and you don't need DeepSeek to show it to us, with every new technology, you're going to see a dramatic decline in the cost of usage. We've seen this with all hardware and software in the last 20 years. So in a way, we're going to run to where the puck or the ball is going to be, or skate where the puck's going to be in 3 years' time. This is going to become so much more cost effective and cheaper to use. And it's not so much we'll be behind other competitors. It's actually we're going to fall behind the users, particularly younger generations, but just everyone, I think. When you see surveys done of in the enterprise world are using Gen AI, they'll say, yeah, a little bit on this. And they say, what about when you're not on the, when you're not in the office or in the home office? And they go, yeah, we're using it all the time. And there's this kind of real split between what we're doing in our day-to-day non-work lives and in our work lives. One is running way ahead of the other.
That, you bring up a really good insight here that ROI isn't just return, it's also costs. And that those things are changing very, very quickly in a pretty uncertain environment too. There's just the rate of change, particularly in agentic AI, is somewhat breathtaking. There's a lot going on there. Thanks everyone for your questions. The other question we get is, how do we get a copy of your research? So we'll make sure that you have a link to that, everyone, after this event. So I want to dig in a bit now into some use cases, and I can tell you what I've seen from talking with our clients around things. And then I have a slide with some of the use cases you identified in your paper. But I'm seeing really 3 places for early adoption. And I'd love to know if they're the same places you're seeing. And those are around client acquisition, communication, relationship building. This is a place where generative AI can really help. I'm seeing a lot around employee development and productivity, saving minutes and hours, but also helping people train and onboard. And then I'm seeing it a lot in the fact that there's a lot of digital systems, and AI was made by digital systems people to do digital system stuff. So we see it in software engineering and IT management and those sorts of things too, from a digital innovation perspective. And so I guess these 3 have sort of like client-facing, employee research and productivity, and then digital innovation. Are those broadly what you're seeing? I mean, I know I can show the chart from your work here because I think that that's pretty instructive as well.
Sure.
But because this is what got me most excited about your paper when I saw it the first time. Okay. I went, oh, right, I get it, right? And so some of this is in here, right? Customer engagement and personalized offers.
Yeah.
I'm just wondering, like, if you're at that state of beginning to do pilots, where do you start, and what are people really looking at as those first use cases?
Yeah, absolutely. So obviously this is this table from our report specifically on agentic AI. Maybe before we get into agentic AI, if you zoom out and look at what we're doing in terms of new things in 23, 24, I think Gen AI and the use of generative AI in coding and software development across most big FIs and enterprise clients, that's where the biggest use case has been. The technology divisions, whether it's for code documentation and also new code generation, code debugging, that's the main use case. We have 30,000 plus developers. My colleagues who run the technology division have said this publicly, that they're all using, and they all have access to Copilot. So that's been, the big use case. To a lesser extent, though, growing fast from a lower base has been us using Gen AI for work related information management, information search. So searching our own
Knowledge management,
information,
right?
summarizing,
Yep.
the classic. A lot of what happens in modern services companies is information management, extraction, analysis. And so generative AI is perfect for that. Looking forward to agentic AI, which is what this slide that you put up is about, Joel. This is still very much, for many of us, at a research proof of concept stage, but it is beginning to get into production. So for example, in the corporate banking area, when it comes to our clients of the corporate bank, so large corporate treasuries, so the finance function, the cash management, finance function of these companies, we have come across examples, live examples of these companies using agentic AI for just day-to-day operational efficiency. A lot of the time when you're doing, particularly if you run back to your days when you were a trainee or a management associate or whatever it's called in your firm, you're doing a lot of kind of extracting information from emails, from spreadsheets, repopulating of other spreadsheets, merging. It's a lot of, I'd say, manual work. It's sort of moving data around, but it's very manual. That can be streamlined. That can be with agentic AI. It could be put into more, if not automated, semi-automated processes. The same when it comes to invoice processing, reconciliations. These things take time. They're kind of boring. There'll probably be 4 or 5 touch points in big companies in that workflow. That stuff can be given to an agent. And there are other areas where, classic pain point for all of us, whether it's corporate or consumer life, onboarding, KYC, having the most frustrating thing is you go to any provider, but particularly a financial service provider, say your bank, and you say, I want to do this, or I want to do that. And they go, oh, fill out this form. I mean, now it's online. It used to be a piece of paper. I'm like, but you know everything about me.
That's right.
Why having to fill out a form? And these forms take half an hour, an hour of your day to fill out. If you just have someone, populate an agent that populates the form, and client satisfaction would soar. There are lots of these areas, agents advising humans, or assisting, not advising, but assisting human advisors. That's a big use case we're seeing in wealth management, and the high end of consumer banking. So if you have enough money to have a wealth advisor, say you have a few $100,000 in the bank, or you're whoever your financial advisor is, or $1 million plus, you expect advice if you're not doing a pure online transaction only broker service. If you're doing anything that you're paying a fee for, you expect advice. Now, the challenge the wealth advisor or bank has is 10, 20 years ago, they had an information advantage over you. They knew more. Today, with the ubiquity of information, we all have almost real-time access to information. So how does the wealth advisor add value, the bank advisor add value? Access to information that they can summarize and present as relevant to you, because you've not had the time to think about it because you're busy with life, whether it's your day job, as whatever it is. You might be, I don't know, a doctor or a dentist or whatever the job is, or just you're busy enjoying life with friends and family. You don't want to think about things like tax and finance and all the kind of really important stuff that actually has a big impact in their lives. If someone can come along, an advisor, use these tools, and then give you a solution that maybe you wouldn't have got from the advisor because it wasn't cost effective for them to do it, because to really get personalized service in tax or wealth, you generally need a lot of money. If you've got tens of millions or hundreds of millions, you're going to have people falling over them to give you that advice. But if you're just wealthy, but middle class, you've done well, but you're not filthy rich, you're not going to get that advice. So this, I think, both Gen AI and Agentic AI is going to be hugely helpful in wealth and the upper ends of consumer banking. In the mass market of consumer banking or other services, as I said, things like just making life simple, making life easier, getting away from the pain points. That's where the big upside comes.
Yeah, I see this almost as a challenge of personalization at scale, because that aspect of, and I think it was really great what you said about the dichotomy of information access, right? There's no longer an information or a strong information differential between the client and the advisor.
Yeah.
But there is some things that advisor is better at, right? And then, but in order to deliver that to the client, whether it's a commercial client or a retail client, at scale, is a time game. It's just how quickly can I aggregate and present that to how many clients to build a book of business or to get the investment levels that we're expecting. And so when we see these questions of just how do I do this faster, so that if the margins or the expected return on each client is down because of that information change, that's where I see particularly agentic AI being super interesting. It's how can we save some time there? Now, you mentioned this use case of just we're in an information business, and in an information business, there's this question of aggregating, particularly as you're coming into the business of learning and aggregating and trying to bring data together in one place just to do our jobs every day. I think that's a general purpose use case also that is not necessarily core to the business. We're talking about trying to figure out how to fill out your own HR information or your own facilities information, or your laptop breaks and you need to reach out to IT. All those things are just basic use cases for a knowledge worker or white collar worker, and even many blue collar workers, where automation can make a humongous difference, and then allow these people to repurpose their time to those personalization at scale type questions to try and get that information out. But I agree with you, right? We're at this point where we can really start thinking about gathering and aggregating more automatically. And you mentioned commercial versus retail. I think that there's huge power in doing that in the retail space for sure, because we can't, unless we are fabulously wealthy, expect that level of personalized service that you mentioned. I think that's super important. So are there other use cases in things like that aren't necessarily client focused as much? I get maybe it's a B2B sort of a play in things like underwriting or capital services, capital management services. Are there places in there that we're seeing AI?
Yeah, I think that there'll be a bunch of use cases internally that most of us will use for internal productivity, and that's going to be the big area of focus initially. For younger companies or for startups, I think the big opportunity is, and we've all heard this, right? And the meme is the 1-person unicorn, but it's probably a 10-person or 15-person unicorn. But the idea that we can have these really scaled up companies, because I don't need to have a lot of people in marketing. I don't need to have a lot of people in ops. I can have a few domain experts. And then a lot of things we would probably outsource as a startup or a scale up, that outsource, you outsource your finance function or your HR function or your regs and legal to, as a smaller company. A lot of those things that you'd outsource, effectively OPEX or internal wage cost or external wage cost, you're partially replacing, not completely, but partially replacing with software subscriptions. And that allows us to scale up. Just like 20 years ago, we had a revolution when cloud came and we could go from CapEx to OPEX, and many of the startups, particularly in finance in the 2010s, in the US, in China, in Europe, they wouldn't exist. They wouldn't have been scalable. They wouldn't have just wouldn't have been funded in 2004, 2003. And it's the same in other sectors, not just in finance. That whole enablement of startups that cloud did, I think Gen AI and Agentic AI does. And so we went CapEx to OpEx, and now you go OpEx to software subscriptions and really fuel that. And that's potentially really exciting in the startup scale-up world. And in the large enterprise world, it's about trying to, there's, I don't know if it's, there's always every big company has a bit of a, I don't mean this in a dismissive way, it just grows after a while. There's a bit of permafrost, right? You have processes because the regulator asked for it, or some legal outcome was that you had to have it, or it was just the way it was done, and so then you just build process after process, and it's sometimes very hard to unwind it because it works. Now that transformation takes time, and that's where the earlier kind of, when you in your question you sort of alluded to, you said explicitly, the ROI, it's not working out, and that's the gap, because we have to like really unwind or almost rewire some of these processes, and whether it's AI or any novel technology or emerging technology, that rewiring of the existing process is what takes time, but with sufficient market pressure, those rewirings will happen, and that's what's going to be interesting, I think, for the large companies. It's hopefully going to give them a extra boost of efficiency going forward.
Well, you mentioned personalization, and I talked about it a little bit. So, of course, we get questions about those sorts of things. And unsurprisingly, the questions are around how do we handle issues of privacy and security in the AI world, and don't most AI firms need to access all your data to generate conclusions, and how do you do that, right? And yeah, no surprise there that that's a question. But do you have any thoughts in that regard?
Yeah, and particularly our sort of, I mean, obviously every financial services company and others will have a lot of client-sensitive data that can't be shared. Even inside our own bank, as an employee, my data can't be seen by my RM without, I mean, I think you have to go a few levels above with permissions, and then, because for privacy reasons, because we work in the same company, they might be able to guess how much money I have in the bank, but they don't have that data. And the same when you're dealing with the outside world. And we have a lot of, all of us as financial services companies or healthcare companies is the same in a different way. We have a lot of personally sensitive information of individuals and for corporate clients, and we have to be careful how we manage that data. Part of the reason we're trusted with this data is because of history of keeping this data safe. Now, models, our trading clients, particularly the hedge fund clients, will say, listen, my data gives me my edge. That's where my alpha comes from. I put it all into the cloud, into, however big and reliable this company is, I'm taking a risk. I want everything, and these hedge funds tend to have the money, so I want everything on-prem, or I want a customized version where the public model or the external model is not getting my data. So there's that extreme solution. There's also many of the large companies will want, it's a bit, I guess the comparison would be, or the analogy would be having using a public cloud for non-sensitive data, and then for your sensitive data or the regulatory sensitive data, you have a private cloud or some kind of hybrid solution, and that's where you kind of probably end up. A lot of data, there's a lot of data in our work, which is not that sensitive. I know the percentages. There's a fair amount of data in all organizations that are probably not regulatorily or from a client or reputation perspective sensitive, that can be, you can take a slightly higher risk approach to. So I think it's about, as with all data, tiering the data and tranching it and saying, this is really sensitive data. We need to take more care over it. And of course, there's over time, as we've seen with cloud, 20 years ago, regulators and large companies were probably more nervous about these cloud providers than we are today, because we have a lot of history and governance standards and processes that have been put in place. And these are very large companies, right? So I think that's given the regulators a lot of comfort on you can trust, they can trust their banks or their fintechs to use these providers. I think the same will happen on AI over time. So a lot of this will be about just giving comfort on here are the process. This is how we deal with your data. Yeah.
I think there's no industry that is as good at quantifying the costs of risk as a financial firm, right? Or banking and insurance. And so that risk, that security, that privacy question, I think comes up a lot. It comes up because personally we're worried about our own privacy, but also because we're in a regulated industry, and this can be a real challenge. But I agree with you, right? We are becoming increasingly more comfortable with the idea that some of the firms we work with have very large security and compliance teams, and in some cases larger than our own, in which case perhaps they're good to rely on, or at least we can rely on them, and work in that partnership to make sure that we're safe, but also we're getting the benefits. I think that's pretty important.
I think a lot of this is about any new technology. I mean, look at the number of people who use self-driving cars now in San Francisco compared to 5 years ago or 7 years ago pre-COVID. I mean, a lot of people don't even think now about, is this risky? They go, well, the data shows that it's less risky than having a human driver. And we've now had this for almost a decade or whatever it is, right? So, and so we've got used to that. But will we get on a self-driving plane? Even though the planes, most of the time, they're actually self-flying, but I guess you still want a pilot or two in there in the cockpit. 1 or 1.5 minimum. I think it's the same for high severity things. High severity, if an event is a high severity risk, we'll still want a lot of human oversight and intervention. But if it's relatively low severity, and there's data to show that it's low severity, we'll probably use the machine. Yeah.
So we have a few questions that have come in, but I've got one last one for you.
Okay.
To pull at your patience here a little bit. So we have a bunch of folks on the line here. What are the 3 things we should leave them with for folks in financial services? What are the 3 things they should be thinking about, or we should leave them with about agentic AI? What are the sort of top stuff that they should know?
Wow. I think that I'm gonna default to that. Is it a Bill Gates quote, or it's a well-worn industry cliche now, where it goes, we overestimate short-term change and underestimate long-term change. Agentic AI could be a replay of what we've seen in white-collar work land over the last 15 years when it's come to the nature of work. 15, 20 years ago, the nature of work was we all went into a building, normally in the central business district or in some business park in the suburbs. We all sat there and worked together. And there was very much one location, one shared location, etc. And then with the growth of data and bandwidth and telecom networks, we began to fragment that, both inside our country, so obviously work from home or work from a remote location, or dispersed teams. And now we have dispersed teams across borders. I mean, we at Citi have had this for years. I'm sure, in fact, one of the sort of phenomenon of startups in the last 5 years has been even the startups are dispersed through new services that allow remote hiring. And just like we didn't have everyone sit in the same building in the same location downtown or in a business park, we fragmented and dispersed the teams. are we going to replace some of these colleagues of ours, human colleagues, with software and agents, like we've had, Excel and spreadsheets and so on, but this will be a different level. And it probably in the short term, we'll overestimate that change because of regulation, compliance, etc. But on a longer term view, on a 5-7 year view, we're probably, many of us we're going to wake up, oh, wow, that just like work structures changed completely. I think that could happen as well. And it's going to have profound questions for the nature of running teams in the future as managers, but also entering the workforce, the jobs we will do. So I know you asked for 3 things, but I think that's just one. I'm just going to say this is potentially on a medium term, 5 to 7 year view, kind of is such a big change that in a way the ROI question in a 1 to 2 year view is potentially quite dangerous. I mean, I know particularly if you're managing, I mean, I run a research think tank. So if you're managing a business, you could say, Ronit, you can sit there and write your papers and go and do research or whatever. I have to justify my budget this year. And I get that. And it's hard to say, I need to spend a lot of money this year because you're not going to get the ROI this year. But that's where the edge is going to come from. This is an old, when I was a stock market analyst, one of the smartest investors out there used to say, and it's kind of a Warren Buffett take as well. You can either have an information advantage, but that's usually illegal, or you can have a time horizon advantage as an investor. And it's sort of the same as a builder and manager. Having a slightly different, that kind of time horizon arbitrage, that's probably going to separate winners and losers. Yeah, so that's a very long-winded way of answering. I'm not answering your 3 questions. But
Oh, no. Actually, so we had a question come in on, as you would expect on, so is Agentic AI going to replace or eliminate jobs, right? And so I think your answer is really germane, because we're all asking that same question, which is, what is going to be the changed? We got one on, what kind of skills will I need if I'm dealing with AI, right? We're all asking those same types of questions. And it's hard to know. That's why I really enjoyed your paper. And that's why I'm really interested in the future of what all this work is going to look like. And I think everyone is as well. So look, Ronit, thank you for your time. I know that you're a busy person, and I really appreciate you taking the time with us today. If you're on the call, you'll have a link to his research, so you'll be able to go and see it, as well as some other tools from us. But with that, Ronit, I'm gonna let you go off and do more of your research, so that we can read it later. Thank you so much for joining us. We really appreciate it, and for you for being a partner on this event. And I appreciate your paper again. Thank you so much for writing it.
Thanks for having me, and to the audience, if you find the paper interesting, my details are in the report. Just ping me an email, and I'm normally quite responsive.
Wonderful. I don't. Well, you might get a lot of pings, and certainly I'll be pinging you as well. Thank you again, Ronit. I really appreciate it.
Thank you.